Hello, DJs, my incredible DJ uh, across Africa, Nigeria, Ghana, and other parts of the world. Thank you for joining the Learn Trending with DJ Skibidi channel on WhatsApp, on Instagram, on Telegram, and yet on YouTube. Several of you asked me some questions after the last training we had in Lekki, Lagos. So I decided to put the questions together and share them with you on my YouTube channel. My name is Tejiskividi, and I'll be sharing some insight on some of the questions that you guys asked me at the seminar, like I said earlier. So feel free, relax, learn, and then make sure that you trade with caution and do your own research before you pick any trade. What we are here to do is to empower DJs in Nigeria, DJs in Ghana, especially in Nigeria, actually, to create a second source of income due to the hardship in the economy. We all know how hard the economy is. The Tinubu's APC economy hasn't been favorable to many of us, and we decided to we decided to create um, an alternative, and then started to empower DJs to learn something different from what they do. So, aside playing at the clubs, especially at night, during the day, what do? You pick up your computer, your mobile phone, you begin to trade and all of that. So let's go. So the first question I want to talk about is um, can Forex be traded with small capital? And the answer that I have to that question is that yes, Forex can be traded with small capital. The only thing is that you need to ascertain what the small capital is. As a matter of fact, the smallest capital required to start trading Forex professionally, if you want to earn money, is $1,000. Now, we know there are several people who ask or who say that you can start trading with as low as $100. Yes, but for me, with $100 or $200, that is more like the learning stage. You are trying to um, practicalize what you've learned with some real money that you can afford to lose, and then you can go with those small amounts. But if you want to trade properly and begin to earn some profit using small lots, $1,000 is best. So what happens? The plan for $1,000 is that with $1,000 you can project about $10 profit in a day. $10 profit, which is 1% profit in a day. So the moment you earn 1% profit, you stay off the market for that day and you come back the next day. You should as well set that 1% profit should also be your stop loss. So you should lose maximum of $10 in a day, and then you end the trade, and in fact you end your general trading for the day and come back the next day to begin another trade using your method. Now, the thing is that we need to be wary of revenge trading. We need to be wary of it. It is a cancan one that is hitting deep and biting deep into forex traders, revenge trading. So, have your method, have your strategy, go with your strategy, ensure that all the market signals says, oh, the strategy is okay. Set your take profit, set your stop loss, and whichever one that occurs first, it's okay. If you win, the truth is that you won't lose every day and you won't win every day. So definitely you'll win sometime and then you will also lose sometime. So just balance it, balance up every stuff so that you don't deplete your capital at once. You don't turn your $1,000 to maybe 800 to 500 or 400 like people do. There are some people burn thousands of dollars in a minute just because they were waiting and expecting and they were working on revenge trading. Yeah, so that is that. Now, another question is, what are the most important things that you need to know before you can start trading? Well, one of them is the fact that you need to understand and the candle patterns and what they mean. You need to understand the hammer. You need to understand the ones with weak, low weak, high weak, volatility. You need to know when a candle is in a trend. You need to know when it is in a reverse. You need to understand those very technicalities. As a matter of fact, spend as much as you can, as much time as you can, learning about this, because those are the intricacies of trading. So when you are looking at the market, you look at the candles, you see previous candles that have come. Has it been a trending? Has it been trending either up or down, or has it been sideways, sideways, just there, not moving up, not moving down. Because if you pick a market that is on a sideways, for example, you pick a buy or a sell for it, and it is a long-term trade, for example, it will take you like forever because you don't even know. Sideways means that you don't know the direction that the candle that the market is going. But if it is an upward trend, you know that okay, this has begun an upward trend. You begin to pick the upward trend, or if it's the downward trend, you know, okay, this market is in downward trend, and then you pick it. So the thing is, you just pick market, and market, it is not possible, depending on your strategy, though, but for simple, modest ones, it is possible that you don't get good conditions at every time that you expect it to. So what you do is you put up something like indicator to notify you when your market meets your conditions, or you use bots, which I'll talk about later in this FAQ, to pick your trades for you. Okay, so that moves us to the next question, and the final question that I'll be speaking about in this particular video. Indicators and candles. What's their good and what's their bad? The truth is that indicators are powerful, powerful tools that can save you time, save you energy, especially if you're busy and don't have all the time to look at the screen. Indicators will help you to go about indicators will help you to go about knowing the market to pick. Yes, so that's what indicators will do for you. And on the other side also, yeah, so on the other side, um boards, trading boards are okay, are good, and they are also not good. You need to know how to use it to your benefit. You can't leave trading but 247 to just trade for you, except you are using the pattern of take profit, stop loss, and if anything happens, come back in 12 hours time or come back the next day. So practically it is doing your own manual job. So you tell the bot, if the market fits this condition today, pick it only once a day, and whatever that happens, it is fine. If there's no market condition, do not pick. That is if you can custom your bot, but of course you can't custom your bot. It's difficult. You practically buy what people created and use them to trade. So the problem is that there's some the bots may have identified the market condition, and then fundamentals can come. Fundamentals maybe from a news, maybe from a breaking news or something, and they will move the market sideways. And while your bot is busy trading, thinking that it had picked the right move, and you may end up in a loss. That is why stop loss and take profit is very important. Hope you educated in this video. Watch our other videos and learn to be a profitable DJ Forex trader. Have a nice time. I'll see you again.